let me first explain the newest feature in TradeWave. There are two things here. There is this very subtle checkbox that just says PE+2. That very subtle, innocent checkbox is a big deal. It changes the scanning regime, which I will explain what that means. Right now, I am selecting S&P 500 stocks. We're looking at a list of stocks I've selected 10 years, based on last 10 years. I could have selected last 14 years if I wanted. You get a different list, or last 20. As you can see, the right side, it gives you the probability. So right now, there are only two securities that had a pattern that started today and was profitable every year for the last 20 years. Let's look at Costco. See that? It's all green. That's because it's 20 of 20. If I say I'm okay with one bad year, you get a bigger list. See, there's one off. But this is all based on last 20 years. I'm going to go back to 10 years again. But now if I click on PE+2, this all changes. Now this is all of the patterns that were profitable that started today in the last 10 midterm election years. So this is actually more like 40 years. I'm going to click on the first one, which is IBM. Look at it. It is negative. IBM is in a down spiral for the next week. Is this going to work this year? I don't know. We're going to find out next week. But look at this. 10 out of 10 midterm election years, IBM fell between 16th of January and 21st of January. And you can see on the trend chart, the drop is just sharp, but it keeps going. I can even adjust it and take a look here. It still looks pretty good because look at it. It dropped 6.5% before it went back up and closed up in 2022. Dropped 5% here before it went back up and closed 0.75. However, the best one is 16th to 21st. Look at it. There's a bunch of shorts. Those are the most highest Sharpe ratio ones are shorts. There's Comcast. Comcast has been going down since 1986 during midterm election years from today until February 5th. If I uncheck this, the list goes back on the left to last 10 years. Just go back here. So I found Comcast, right? What if I want to know about the last 10 years? Well, look at this. This is the second new feature. Probably need a better color than this. It's right here. Now there's a new select box that allows you to select consecutive or one of the presidential election cycle years. We were on PE+2, but I'm going to switch it to consecutive. And now you can see what it actually was pretty bullish if you look at the last 10 years. 6 out of 10 years, it was bullish. 4 out of last 10 years, it went down. But when I switch it to PE+2, it went down every PE+2. So I have it described in chapter 8 of the book really well. I call these the two regimes, either part of the cycle or part of the consecutive. So you can see that when you see this happen, means that the PE+2 regime was dominant for Comcast compared to consecutive years. I can also say consecutive and then look at the last 20 years for Comcast. You see, it was actually really negative for 5 years in a row. It looks kind of random. But this does not look random. So Johnson & Johnson also has the same thing. Eli Lilly, and so on. Now I just switched to 9 out of 10 years, and you see a much larger list. Well, the top ones are W.R. Barclay's actually bullish during um, during midterm election years over the next 110 days, which is from today until beginning of May. So these are the new features. We had this PE cycle before, but it was stuck on the top of the years, which doesn't really make sense. It was a little confusing. It only showed every single year, but now we can adjust it. So for example, I can go to a company like IBM and then see our data shows that we have 15 midterm election years in the data, which also shows a lot of negatives, but in 74 and 82, it closed positive. If I click on MFE, so favorable excursion and favorable excursion for a short is pink. So these are not drawdowns. Drawdowns would be green when it's short. See, even the positive years, it dropped almost 2% and 2.26% before closing up. So this might not be a bad idea for an extremely quick short to just go in and out. This would be a possibility. What would be the drawdowns? Oh, you can get some big drawdowns. In 2018, it was 4.44%, 3.2% in 98. So that's that. But now I typically first talk about the broader markets, but I just wanted to point out those new features. So I'm going to indices common now. Type SPX. We are selecting in PE+2 midterm election years, but on SPX we have 98 years of data. That's 24 midterm election years. I want to look at the first quarter of midterm election years. As you can see, from 62 till 82, it was all negative. 1990 and 94 were also negative, and recently from 2018 to 2022, we're also negative. So far, we're up 1.25%. So as you can see, this is a short. That's why this square is red. That makes MFE, or let's go look at the drawdown. 2018 drawdown was 6.5%. Or favorable excursion, look at this. In 2010, it dropped 7.81% and then closed up. Dropped 5% and then closed up. In 2006, it didn't really drop that much. And it didn't even close up that much. It was a low volatility year, unlike the other years. So what does all this mean? This, to me, it means that S&P 500 during the first quarter of midterm election years is going to be very volatile down. So I wouldn't go on a buy and hold. It's not the time to be on buy and hold in S&P 500, showing that the broad market is negative. It has been negative for the first quarter, at least partially, since 1958. Last time we didn't have this drop was 1958. So when I look at the trend chart, as you can see, the trend chart goes down and goes back up and down. And then there's this mother of down right there. Usually, if the market is bullish, you see the trend chart going slowly up. Not like this, going up, down, dropping sharply. This is the reason that I can see that midterm election years are a very volatile to down times. But everything changes right here. Right there. I believe it's 27th. I'm just going to show you. This is what I call the beginning of the 100-year pattern. It lasts 295 days, starts on 27th of September. This is what I was saying, Neil, that no one that I can find has ever hinted about this. Look at this. From 27th of September of a midterm election year for the next 295 days until July 18th of the following year, the market never closed down since 1930. At the height of the Great Depression was last time this date range failed. I call this the 100-year pattern. And this is why I named the book The 100-Year Pattern. Dropped 23% in the Great Depression era and never again. This is a good time to be long or do long trades during this period. Before that, things are not going to be so great. Now we're back into third quarter, first quarter, second quarter. Also not so great. Was way down in 2022. In 2018, it didn't really go down for the second quarter. Also in 94. Again, but it does look pretty down overall. However, I can adjust this from the peak to the valley right there. Now you can see it really is a negative time. This is what they call, I'm sure most people have heard, sell in May and go away and come back in October, I believe. I have another part in the book that describes it. That is completely wrong. That summers are statistically the same as rest of the year, except midterm election years, and this is why. But it is so strong down moves in midterm election years that it influenced the overall statistics of people that were not very sophisticated. So they attributed the issue to the summers, not to a particular part of an election cycle. TradeWave found that this is only happening in the midterm election years. No other time do you have this problem. If I just click on PE plus, presidential election years, you're going to see that it's actually pretty smooth up. PE plus 1. Yeah, some sideways and then starts moving up. And PE plus 3, that's another good year. You can see it was very positive, but we're far away from that time. Anyway, this is how I look at the broader market. Now, I'm going to go back to S&P 500 stocks. Here's another method of measuring that I have found I think it's a real big deal for TradeWave at least. Right now we are on January 16th, and the list on opportunity table you're looking at is for the last 10 consecutive years. You can see on the bottom right here, right there, it says 242 opportunities were found, 227 longs and 15 shorts. Now I'm going to look for a shorter period. Right now, this is all days that could be from, actually in this case, 7 days to 365-day patterns. Those numbers are, the length of patterns are so different. So I can adjust that by saying I only want to look at patterns that are 5-60 days. Let's see what's happening for the next 2 months. So if you look at the bottom, actually first, every pattern that's found is no longer than 60 days. It filtered the rest of them. So it can give us exactly what we want to see. It found 86 opportunities, 73 longs, 13 shorts. 84% of what it found were longs. I'm going to click this button right there. Look at what happened. Now we're looking at the last 10 midterm election years, not the last 10 consecutive years. Now it says it's found 30 opportunities, 11 longs, 19 shorts. We are in more of a negative territory. What if I look at it since the beginning of the year, basically for the first 2 months, from beginning of the year till pretty much end of February. So I'm just going to say second. Look at that. It found 33 opportunities, 12 longs, 21 shorts, 63% short. If I go to 5, 30 opportunity, only 5 longs, 25 shorts, 83% shorts. But if I uncheck this, it tells us sentiment is long. Sentiment is not long. Sentiment is this. So this is what I'm saying. This PE+2, by the way, next year it's going to say PE+1, and last year it said next year it's going to say PE+3, and last year it said PE+1. It just says based on what the current year is. But this checkbox changes the regime from the current presidential election cycle to consecutive. So the way I use this, what I'm showing you down here is, if I switch this and I don't see that much of a difference down here on the percentage of longs versus shorts, then I say the regime is consecutive. I can look at consecutives comfortably. But if I click this and one of them shows longs at high percentage, and when I click this, it shows majority are shorts at high percentage, that means that the midterm election year is dominant right now. You should really be looking at opportunities here. Best opportunities are shorts, not long. Longs are only based on last 10 years consecutively. But midterm election year is influencing what actually is dominant right now. I hope that makes sense, because I haven't said this to anybody, Neil. I'm just, I just came up with this as I developed these features, and these words of regime is something new I came up with.
It makes sense. Thank you.
Great. So then switch this to 90 and see that things change. It's 50-50 now. 25 longs, 25 shorts versus 89% longs if it was consecutive. Now, I want to show you something really cool. You must know the most valuable stock in the world. Nvidia. Here's Nvidia buy and hold. I'm just going to select. This is how Nvidia is done year after year. And by now, it's around $5 trillion in value, or so it was when the stock was at its peak. Nobody really dares shorting this stock except those daredevils who really don't know how to time the market. But this, because a very high cap stocks and many commodities really run on the presidential election cycle regime, what I'm going to do is switch this to P+2. It's only 6 years of P+2, which is not a lot of data, but it also still gives us quite a bit to work with. Really, the first presidential election, midterm election year that Nvidia was public is 2006. But now take a look at this. Look at the trend chart. There's some big moves ups right there. very strong move ups, 14%, 14%, 9%. From 4th of February to 16th of February, very short period of time, Nvidia could move substantially up. And it keeps going up till about here. And it shows it right there. Again, look at this, 15, 14, 18, 8. And this is from the 4th until 24th of March, right beginning of spring. So Nvidia could go up sharply during this time. Maybe it'll hit a new high, but look at what happens right here. It collapses, goes down sharply all the way to here. What does this look like? Well, I'm going to just go to the first day of spring. That's the first day of spring, and then go all the way to the bottom, this valley. Look at what's happened to Nvidia during this time. Only on midterm election years. In 2002, it dropped 79.56%. But Nvidia wasn't the company it is today. They really weren't an AI company. They were just making graphic cards for gaming. But in 2006, that's when they started becoming an AI company. It dropped 16%, another 16%, 32% in total. That was the maximum drop. Then it closed down only 16% during this period. 2010, they were an AI company. They dropped 47%. 2014, small drop, 4.15% and 1.45. So really, 6% was the maximum move down. They dropped another 15%, but closed down only less than 1%. In 2022, they were an AI company, exactly what they are today. They dropped 31%. They closed down 31%, but they went all the way another 16%. They dropped half of their value during the state range that we're looking at right now. What are they going to do this year? Well, chances are Nvidia could, at some level, repeat this. Why? First of all, they're the most valuable company in the world. Second thing is, the product that they make, which is GPUs for training. I mean, they made all their money for these GPUs that train AI models are now becoming a commodity. AMD's making them, Google's making them. There's some companies out there that make inference chips. One of them was just made a big deal with OpenAI. That Intel is making it, so their product is becoming a commodity. That doesn't mean they're going to go away, but chances are their growth is going to go slow down, and maybe that information is going to come out. They are the most vulnerable time during this date range, which is March 21st until August 1st, based on this date range. This is a good time to try to catch at least part of the short move with option trades. Is this going to definitely happen? Of course not. The market doesn't owe us anything. But the probability is on the side of this happening again. at least making a drop, even if it's going to turn around and go up and close up, chances are strong that there will be a drop because that's what it's done 6 midterm election years during this period right there. I'm definitely going to try this during this period. I'm going to jump on some option trade, see what I can do. Today is 16th. I am going to go and look at the last 12 midterm election years. These are very long. And I'm going to select 11 out of 12 midterm election years successful. We got a much, much longer list. 25 opportunities, 21 long ones, and 4 shorts. However, what is it in the next? Let's make it 80 days, which means we're right toward the end of March. We saw that the broader market does go through a bullish period into the end of the and beginning of spring, and then starts dropping. Here's Lockheed Martin. They seem to be in a strong up move during midterm election years. And I actually have seen that one in Northrop too. It seems like midterm election years seem to be negative on the summer for technology, consumer discretionaries, and many other sectors, but strong in defense. But looking at the trend chart, it looks like it's better to wait till about here. I always like to catch the bottom. This is not always the case, but sometimes it works much better if you find the lowest point on the trend chart, which it looks pretty good right here, which would be 24th of January. It goes up sharply. Look at what it's done. 2022, Lockheed Martin went down, up 15, and an additional almost 30%. Lockheed is not a company that's very volatile, which means their options are cheap. Their implied volatilities are low. If you find things like this, you can buy really cheap options that can potentially, if it repeats what it's done historically, can become very valuable. 2018, almost 10%. 12 and 2, almost 15. 12, 16. These are pretty big moves for a low volatility stock like Lockheed. Pretty sure Northrop is similar. Yeah, look at this. Same thing. Northrop also has strong up moves. Look at this, 20%, 12%, 5, 18, 15. So, oh, look, even in 98, which it failed, it first went up almost 14% and then closed down 10%. So this is a time to, if you want to be bullish, defense is a better choice. But look at it. In the summer, Northrop then goes into a down spiral all the way to the end of July. Actually, really about here. This is pretty close to what we just saw with Nvidia, the date range. However, it didn't really do much in 2022. Went up almost 6% in 2014, but dropped. It's almost 20% in 2018. More than 20% in 2010. 7 and 6, 13%. Almost 20%. These are low volatility stocks. Low volatility stocks really mean that the options are cheap. So when you find this kind of opportunities for this, it's just great. If you go and buy Nvidia, Nvidia is a volatile stock, which means options are expensive. But these are low volatility stocks. Things like this don't usually happen. But we can see in midterm election years they do. Another short move for IBM right here from today until March 6th. Average drop is 5.57. 92% of the years it was successful. Even in 1990, first it dropped 5%, then it closed up. Becton Dickinson's long, bullish during this time. However, its up move starts earlier on January 6th. And Bank of New York. Very negative here. I'm pretty sure Bank of New York is a low volatility stock too. Yeah, but this is actually about average down of 4%. In 2022, it dropped. And this is actually 12%. 5, 7. Yes, some of these are actually huge drops when the implied volatility of an option is really low. Means you can buy the options extremely cheaply. And when drops like this happens, their implied volatility just shoots up. And the option becomes very valuable compared to what you paid for it. I can also look at 10 of 12 years, and then I get a bigger list. Eaton. 2 years of downs, but the rest is up. Travelers. Yeah, these aren't as interesting. I'm just going to quickly also switch to the futures. Sometimes we see very interesting things in the futures, which, depending on different times, futures literally drive the entire broader markets. I am not a futures trader, but I look at them all the time. Oh, I don't think I have data updated. This American natural gas is on a down move during this time of the year, starting today until mid-February, actually bottoming on 22nd. And then going pretty much up rest of the year until November. Oh, wait, I'm looking at consecutive years. I have to click that. I think they're more dominant. Yeah, look at this, live cattle. Live cattle is going to go on a down cycle. Today into end of May. HE I've talked a lot about, but I don't touch HE until April, really, when there's this huge move up. Lumber. Huh. I don't know why my data feed doesn't have these. Sugar. Look at the down move here. This is based on the last 10 midterm election years. Very strong down. And silver. Kind of down. Also want to look at gold. Most important of all. Yeah, gold is on up move. Usually when there's market trouble, people get into gold. Look at this. I just moved it to beginning of the year based on last 6 years. So far as gold up is up about 3.7% for the year. 2022, it went up over 15% before closing up 2.86% until 10th of May. So gold is generally bullish in midterm election years going into end of May, right here. I just switched to 8 of 10. Also, if I switch to last 6 midterm election years, I get much longer list based on where we have data. Something I look at quite a bit. Oh, I have to check what's wrong with my lumber. Yeah, live cattle. I can look at it with midterm election years, which is bullish for the last 6 since 2002. Basically, this century, it's been bullish. For this period, look at that. Here is a live cattle that's going to be bearish from the 12th of April until 24th of May, maybe 25th. Yeah. Average gain on the downside of 7.76%. And this is not there either. All right. That's all I have for now. Oh, let me just click on crude oil also. Let's see, crude oil is on an up move, which is hard to believe when there's Venezuelan oil in the markets now. Look at this. Strong up right here. From 15th of March until May 2nd. Average of 11.5% up. Wow. That's a good one. And again, this is based on presidential election +2 or midterm election years. We can also look at it consecutively, 42 years of data. It's actually pretty strong based on consecutive time too. However, the percent profitable drops to 67% versus much better we had. %80 here. 90% when I moved to this peak right there. It's only failed in 1990. 15th on 501. It's a big move. I gotta save this. Just gonna click on plus. I hadn't looked at this. All right. That's what I had today.